Federal Reserve President John Williams believes interest rates are at appropriate levels. He was at a conference in Washington earlier today saying, quote, "I think we have monetary policy in the right place. The economy is right where we would like it to be." Joining us now is Danielle DiMartino Booth. She's CEO and Director of Intelligence for Quill Intelligence. Good to see you again, Danielle, as always.
Likewise.
What was your big takeaway from what he had to say today?
So we have to remember that he's second in command at the Fed.
Yeah.
He is the vice chairman. The permanent position and the permanent voting position of the New York Fed president is that they're vice chairman of the Federal Open Market Committee. So if Jay Powell gets the stomach flu, he's the one running the meeting. So his voice is very influential. And what I took away was that he's definitely on board with where the majority of members are right now. However, he did say that there's no preset course for policy. And he also referred back to a very controversial July speech that he made in which he said there's no reason for the sake of keeping dry powder dry to keep dry powder dry. In other words, I think that he would be more in favor of many of the more hawkish members of the committee for a further rate hike if we were to see the economy continue to show pockets of weakness outside of extremely interest rate sensitive sectors, such as housing, which you were just speaking about.
That's right. Now, the Fed plans on buying $60 billion in T-bills per month. Mm-hmm. I don't know about you, but that sounds an awful lot like quantitative easing to me, although the Fed isn't coming out and saying that.
No, and that's why in the Twitter sphere, it's called not QE. And, you put the not QE in air quotes because just because it's not out at the far end of the maturity, the 10-year and beyond on the yield curve, it's still where the U.S. government does a big chunk of its borrowing. So the criticism that the Fed is monetizing the debt, I think, is very well founded because of the bulk in which they're buying. And these are not overnight operations. In addition to that, last week there was a very quiet announcement out of the New York Fed. It was like, yeah. So first they went out to 14 days beyond the overnight liquidity operations. Right. And last week they announced that they'd be extending out to, I think, 42 days. And then December the 8th, there's going to be an additional operation out to 28 days. So the Fed is continuing to push into the quantitative easing realm, even beyond the overnight technical liquidity operations that are underway at the New York Fed. Yet it doesn't want to call it that because it wants to maintain this veneer of we successfully had 3 rate cuts. They did what we needed them to do for the markets, for the real economy. But by the way, in the background, we're going to be blowing up the Fed's balance sheet at a $1.6 trillion annualized run rate. But don't pay attention to that because it's not QE.
Why not then just cut rates one more time and completely undo what they did last year?
Well, I'm not sure that right now they can't. They wouldn't be extending the term of these repo operations if there weren't undercurrents in the market that were telling them that as year-end funding pressures approach, because we're still in November, and I can't wait to see what the quiet fireworks in December, because all of these press releases come out after the market is closed. They're not covered by the news wires, but I can't wait to see what happens as December approaches, because we still have the issue overseas of there being an acute shortage of dollars. So everything is not necessarily in the Fed's control.
Right.
And I think that's why we're seeing the amplification and the growth in magnitude of these liquidity measures that are not QE.
And at the same time, Jay Powell and company have to deal with President Trump breathing down their necks, right? So Trump met with Powell this week, seemed to say that things were very cordial, but yet he's still needling him, asking for lower rates, even asking for negative rates. And I know the Fed came out with a statement saying that we remain independent. But what's your take on what Trump is doing with Powell?
So I really do think that he's trying to push him into, I think Trump is fascinated with the fact that Germany gets paid to borrow money, the country of Germany. He's just like, wait a minute, we can actually make money doing this? This is a great, but it's obviously very un-American. And Jay Powell has been public in saying, we do not intend to go into negative interest rate territory. I think that they're trying to offset that with liquidity measures. But no, you're right. It cannot be easy. I felt that the statement that came out of the Fed that followed the meeting with the president was very pointed in saying, we will not make policy based on politics. And I think that was their way of cordially rebutting the Trump tweet.
Nicely put. And now, of course, tomorrow the FOMC minutes will be released. There's been some dissenters there. Right. Do you think we're going to find that that's still the case? Or are they more on the same page? What are you expecting?
I think that because Chairman Powell has indicated that he pretty much wants to stop, and probabilities of a December the 11th fourth rate cut have basically vanished. So I think that the market is going to largely fade the Fed minutes tomorrow, because I think the dissents are something of the last meeting. And the real fireworks anyways are what is happening quietly with the liquidity operations. I think that is where the market's focus is. And what investors need to appreciate, though, is that every time the Fed votes to, say, do $60 billion of quantitative easing, that they won't call it that, on October the 11th, in between meetings, that there's an emergency meeting that has to be held with Fed officials, and there's a true vote that's taken for all of these little baby step measures that are technical in nature, that are not QE.
Yeah, amazing how under the radar it was.
Absolutely.
We'll be listening for all the whispers. All right, Danielle,
Thank you.
DiMartino, Booth, thanks so much as always.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.